The end appears nigh for First Republic Bank. That stock again in free fall after hours. And Reuters is reporting that the FDIC is preparing to place the bank under receivership imminently. Joining us now with more, CNBC's Leslie Picker. First up on Last Call. Good to see you back, Leslie. I wish it was in better circumstances. Looks like the end of the road for First Republic, at least as we know it.
In the last video, we spoke a lot about First Republic Bank and their financial position. We know that the bank was basically in ICU under care of the Fed and also getting $30 billion in additional loans from other financial institutions. Here we are, the bank is now in receivership, a lot is going on, so what's next? Let's get into it.
Yes, Brian, thank you so much. It's good to be back. And yes, the flight of capital here reportedly making a private market rescue deal for First Republic untenable at this stage. Reuters reporting that the FDIC is preparing to place First Republic into receivership imminently. That word you used, it's also the word that the report and the source familiar with the matter used. The report said that the deterioration in First Republic's position does not allow for more time to find an alternative solution through the private sector. This mirrors our David Faber's reporting from earlier this morning, which said that a receivership is the most likely outcome for First Republic. The FDIC told our team that it does not comment on open and operating banks. First Republic did not respond to our request seeking comment this evening. Now, shares of First Republic plummeted after reporting earnings earlier this week, showing a flight of deposits despite that infusion of $30 billion in deposits from larger firms to shore up confidence.
So after getting billions of dollars in loans from the Federal Reserve and another $30 billion in loans from other banks, First Republic Bank was not able to stay afloat and is now in receivership with the federal government. The question to ask now is what happens next? We know that the assets are going to get chopped up and the banks will get the good assets and the government will get stuck with the trash. But the other thing that you have to pay close attention to with the media, as I spoke earlier, I said it's always about a game of confidence. So they always have to throw in there that, oh, while this bank is doing bad, the overall sector is doing great. Don't worry about nothing. Don't pay attention to the building that's on fire behind me. Just keep on going, doing what you're doing. Nothing to see here. Just keep moseying on. But that's not the case. There are a number of other banks that are in the same situation as First Republic Bank. The thing is that you're not quite hearing about them yet. But I suspect in the near future, we're going to see something. Let's continue.
It's worth noting, though, that investors in the broader industry don't appear too concerned about major contagion from First Republic, with both KBWR and KBWB in the green today, although both, of course, down significantly since early March. Brian.
All right, Leslie, stick around. Stay with us. So we're going to roll Leslie into a panel as well. Let's bring in our friend Kate Kelly of the New York Times, as well as analyst Gerard Cassidy of RBC Capital. Gerard, first to you. Number one, your reaction to First Republic. I'm not sure this is a surprise to anybody, but here's the more important question, I think, is this it for sort of the mini banking crisis? I mean, is First Republic the last domino to fall?
To that question, Brian, I absolutely believe that is the case. When you take a look at what happened here, the funding side of the equation for Silicon Valley and Signature Bank obviously was the reason for that the downfall of those two banks, as all that money left when it became panicked. Now here at First Republic, as they've reported, as you said a moment ago, they reported earnings this week. And they've reported they lost over $100 billion of deposits in the first quarter of this year, most of that happening in March. So I think, in our opinion, these three banks were outliers. This is not the way normal banking is done. All three of these banks had very low percentages of consumer deposits, completely different than our mainstream banking. So I do think that these are the three outliers, and I do not expect this to spread, as you pointed out.
You know, it amazes me. Here we are in 2023, and they still think that it's easy to manipulate the public. That may be the case, but if you really think about it, this type of situation we're seeing here is what I refer to psychologically as appeal to authority. It's where the media brings on a so-called expert to talk about a subject to support a narrative. As I stated earlier, the banking system is a game of confidence. It's backed by debt, right? So they have to keep people calm and keep people in the system and make people think that everything is good and that the banking system is flawless. As you heard this person state, everything is all good, nothing to worry about. Don't worry about the burning building behind me. That's just an isolated incident. We got that under control, but everything else is great. But yet on the screen, they showed you a list of other banks that are in the same situation First Republic is, where they're struggling, right? Deposits are leaving. I've even put up screenshots on my post on Twitter about this, where you can see how much capital is fleeing from the banks and going to money market funds. It's leaving huge holes in bank balance sheets, and these banks now have to raise capital. But the problem is that the capital that they have, the market value has dropped, right? And so if they were to try and pledge these assets, they're not going to get what they're worth, and they have to realize the value of those assets. That's why the bank is now forced to go to the Fed program, because that's the only way that they would be able to raise enough capital to try and stave off going into receivership, which is a form of bankruptcy. So when you really look at this, the situation hasn't really changed, and we just had another domino fall. My suspicion is that this is not over, and that we will continue as we move on to see other banks fall in the same situation, as we will never go back to how things were before. So that means that businesses have to think differently. And that's not the only thing impacting these banks, right? So with that being said, you just got to expose some more game, man. When you see these people come on TV and tell you to keep calm and keep it moving, basically they're trying to cover up what's really going on, and you shouldn't allow yourself to fall for it.
Okay, let's hope you're right. You know, Kate, listen, there's been 4 banks that have failed, okay? And they're all kind of somewhat similar, but also very different. Silvergate, pretty much pure crypto. Of course, you got Silicon Valley Bank, catered to venture capital, Signature Bank, which kind of got in trouble with some of the crypto. But First Republic, which, by the way, as you point out, is bigger than Silicon Valley Bank in terms of deposits, this is the most, I would say, I'm using air quotes here, normal of the banks to fail, is it not?
Yeah, I mean, was bigger, right? I mean, if you look at the Fed's list of the nation's largest banks by assets, it had about $213 billion in assets at the end of last year versus about $195 for Silicon Valley Bank. So to me, this is a big deal. And even though it's been well telegraphed that FRB was having these troubles, it's still kind of scary. Now, who knows whether this will be sort of the final act in a multi-act play, as we were just hearing, or there's more to come. I mean, I couldn't possibly speculate, but it strikes me that FRB sort of bumped along in recent weeks, despite the outflows that were just astonishingly large, despite an attempt to stabilize it by these other larger banks, and it's failing anyway.
Yeah.
We think.
And that,
So,
well, that's, Kate, I think, as usual, you nailed it. I'm sorry to step on you there. Leslie, I think Kate just laid it out. I mean, let's not forget, okay, if our viewers and listeners who have not been following this story that closely, First Republic basically, number one, sort of got that implicit government guarantee about a month or whatever it was ago on that Sunday we did the special, but then also Jamie Dimon and others were like, okay, we're going to put a bunch of money into First Republic and shore it up. Nothing worked.
So we learned that after all this help that this bank received, getting the billions in dollars of loans from the Federal Reserve, getting $30 billion in additional capital from other banks, this bank still got overwhelmed by deposits leaving, right? And this is not happening only to this bank. There's a fundamental change in the banking system now that we are in a higher interest rate environment. It doesn't mean that we're beating the rate of inflation, but what it does mean is that people are not going to leave their money in the bank when it's not secure. And if they have other alternatives that are at least going to give them some return on capital, they're going to place their funds elsewhere, whether it be in a money market fund, whether it be in short-term T-bills, whether they buy other assets like gold and silver. It does not make sense to keep your money in the bank if you're not going to be rewarded for it. So now there's a competition for capital. And for such a long time, banks have been used to having a monopoly and giving people nothing for their money. Well, those days are over, and I don't think they're going to end anytime soon, and I don't think that we're going to go back to a low interest rate environment because of other factors that are happening due to the weaponization of the financial system, and I'm going to get into that later. So, what happens from here? It's going to be fascinating. Let's hear more.
The bank is basically going into
Right.
receivership, which is sort of almost a fancy banking term for bankruptcy.
Yeah, I mean, even at the time that they put that $30 billion in deposits, and the whole purpose behind that was in order to shore up confidence in First Republic. Even at the time that they did that, people were saying, is this actually enough? Is it just going to kind of kick the can down the road? It appears that the latter is exactly what it did.
So I guess we come to the close of another chapter in the banking saga. First Republic Bank is no more. Assets will be chopped up and sold, and the trash will be left over for the taxpayers and the government to deal with. And we now have another list of banks that are pretty much in the same situation. At some point, as the money continues to leave the banking system and goes to other areas, banks will be required to raise capital. And if they're trading in treasury bonds trying to raise that capital, they're going to have a hard time and need assistance from the Fed to do so. And if these banks get into more financial trouble, as they start having to refinance the loans that they have in commercial real estate, this problem is going to get exacerbated and be much worse than what it is right now. And the question becomes, what is the collateral damage and where are the opportunities going to come from? So I'm going to be looking into that, and as I find out more, I'm going to be sharing that information with you. So if you like this content, please give the video a thumbs up. Please like and subscribe. Please check out my Twitter account, because I do post on my Twitter account and I provide screenshots showing you data of what's really going on in the market. So if you can, take a look, let me know what you think. And with that, I'll see you on the next video.